Hey guys, and welcome to my channel. So I really didn't have time to do any videos this week because my week has been crazy. I've been so busy. Guys, I have only came home to sleep this week. For me, that's pretty unusual. I mean, I may have been home for a couple hours in the morning, but I was getting ready for what I was going to do during the day. So I didn't really have time to sit down and do any videos. But I did want to at least do a video this week covering how my portfolio did last week. Now, what I did was on Friday after the stock market closed, I took some screenshots of both of my portfolios, my real estate investment trust portfolio and my dividend stock portfolio. I also took a screenshot of the week performance for Berkshire Hathaway, Warren Buffett's company, and the S&P 500 index. Now, I want to cover two things before I get to the data. The first thing I want to cover is why I am using Warren Buffett's company, Berkshire Hathaway, and the S&P 500 index as a benchmark for how well my portfolio is performing. Most people, that are mutual fund managers, and a lot of these people have degrees in finance, are supposed to be experts in this stuff, fail to outperform the S&P 500 index and Warren Buffett's Berkshire Hathaway company, which I think right now Warren Buffett's portfolio is all Berkshire Hathaway, and Berkshire Hathaway holds all these other companies like Kraft Heinz and some other companies. So even though Warren Buffett holds one company, it's almost like owning a mutual fund. That stock is basically has ownership of a bunch of other companies that are in Warren Buffett's portfolio. And there's some other people too that are involved in Berkshire Hathaway that also choose what to invest in. So not all of Berkshire Hathaway's investment decisions are made by Warren Buffett. Now, the reason why I'm comparing to Warren Buffett's company is because Warren Buffett is worth $80 billion, despite donating tens of millions of dollars to charity. Warren Buffett is a brilliant investor, and the brilliance of his investing strategy is in its simplicity. And you can watch videos about his investment principles. I mean, they're kind of here or there. There's not really any that I can think of, except for maybe one video about Warren. If you just go on YouTube and type Warren Buffett's investment principles, you'll find some videos that kind of categorize them. But you know, his investing strategy is really simple. He doesn't really get into specifics of how to value a company. I haven't seen any videos of that. He just says that's the trick and he moves on. But he's a very brilliant investor, and because of that, I just think that's a great goal for me to try and beat him in investing. Now, will I do it? I have so far, but long term, who knows? I mean, Warren Buffett's a brilliant man. I'm not going to say that I'm a better investor than him. So far, I have outperformed it, but I've only had this portfolio for several months. So it's very possible that in the future, Warren Buffett's portfolio may pull ahead of mine. The S&P 500 index is the largest 500 companies in the United States. It is typically used as a benchmark for how well mutual funds or stocks are performing. And a lot of mutual fund managers, despite their credentials, cannot beat the S&P 500 index. Now, Warren Buffett has beaten it on the regular. With Berkshire Hathaway, it has regularly outperformed the S&P 500 index, or at least kept pace with it. So I'm hoping my portfolio will at least do that well. The second thing I want to cover, adjust this real quick. There we go. The second thing I want to cover is what the purposes of both of my investment portfolios are. I did touch on this slightly in a previous video. I explained that the reason why I have these two portfolios separated is because it makes it easier for me to see more clearly what I'm getting taxed on whenever I get my 1099 forms. If I had all of them together, it'd be a lot harder for me to figure out what taxes are attributed to the REITs and which taxes are attributed to the dividend portfolio or to the dividend stocks. Now, the reason why it's important to me is because dividend stocks, after you hold them for a year, with the exception of a few things, like real estate investment trusts and master limited partnerships, are taxed at a qualified rate after a year of holding the stock. So that means that you get taxed for regular income on your dividends the first year that you hold the stock, and then after that year, if you're still holding the stock, you get a qualified tax on your dividends. And if you're in a fairly low tax bracket, that means you get a break in your taxes for your dividend payments. Now, with real estate investment trusts, it's not really like that. The real estate investment trusts are tax efficient in the sense that they are pass-through entities. The real estate investment trust, as long as they pay out 90% of their profits as dividends to the stockholders, then they don't have to pay any tax on their income. They don't have to pay the corporate income tax. We as investors have to pay a regular income tax, but because of the corporate tax not being paid by the company, it means that we're already getting tax savings, because we're already getting savings from taxes because that money is given to us prior to our being taxed, tax-free. So it's not tax-free for us, but it's tax-free up until it hits our tax bracket. So let's say you had a corporate tax 15%, right? You get the real estate investment trust gets the money rent from the tenants, and that money is taxed at 15% for profit. The profit is taxed at 15%, and then it's given to the shareholders as a dividend, and then we're taxed again at our tax rate. Now, with a pass-through company like a REIT, you have the dividend not being taxed. So the dividend just goes straight to the shareholder, and then the shareholder gets taxed. So we're having more money come in initially before it's taxed. That results in tax savings for us because we don't have that 15% shaved off by the time it gets to us and gets taxed again. So that makes real estate investment trust actually a pretty tax-efficient investment. Now, my real estate investment trust portfolio is only has 2 holdings right now, and you'll see those whenever I show the screenshot of my portfolios. And the real estate investment trust portfolio is more about the dividends than trying to outperform Warren Buffett's company or the S&P 500. Because a lot of my portfolio's performance for the REIT portfolio is going to be dependent on how well the real estate market does. And it's hard to have a lot of control over your portfolio's performance whenever you're tied in one sector, right? Now, I have very strong companies that I have the utmost confidence in this portfolio. These companies actually yield north of 10%. Yeah, that's right. They pay over 10% in dividends. No, it's not too good to be true. A lot of people say it is. It's not. They actually have a pretty reasonable payout ratio, and they also are profitable, even with their earnings per share. They're profitable. You can look at the balance sheet. It's very healthy. They're not drenched in debt. And they even have the cash to cover the dividend, should they not have any, even if they didn't have hardly any cash flow the next year. So, very financially strong companies. My dividend portfolio, on the other hand, I'm actually trying to outperform the S&P 500 index and possibly Warren Buffett's company, Berkshire Hathaway, and while also trying to maintain a dividend of at least 4%. So, overall for the company, like a dividend yield for the entire portfolio should be at least 4%. So that's why I have these 2 portfolios. So let's take a look at my portfolio this week and also the 2 benchmarks I laid out and see how they compare to each other. Okay, so let's look and see how the market did. So the S&P 500 index for the 5-day trading window for last week was down a little bit. They're down negative 0.22%. Now, that's a relatively level week for the S&P 500. It is down a little bit. It's just one of those weeks that's not much happened as far as the value of the index. It's not a terrible week. It's just down a little bit. You have some weeks where it's up or down. So, it's pretty much one of those things where the buyers and the traders are about equal in their activity. When the buyers are trading more than the sellers, then the stocks in the index go up, and then whenever the sellers are trading more than the buyers and the stocks in the index usually goes down. So it's kind of a stalemate here about who had control over the market this week. Warren Buffett's company this week had a performance of negative 0.85%. A little bit worse than S&P 500, but what they say, you win some, you lose some. Typically, Berkshire Hathaway does at least keep pace with the S&P 500, and it often actually, on a fairly regular basis, does tend to outperform the S&P 500. So, so for them, not a terrible week, down a little bit, but that's just what happens sometimes. I have weeks where I'm down too. So, let's go ahead and look and see how my portfolios did by comparison. First, we're going to look at my real estate investment trust portfolio. So, last week, my portfolio was down for the real estate investment trust by 0.16%. Now, actually, this week, the real estate and investment trust portfolio did better than both the S&P 500 index and Warren Buffett's portfolio. So I'm pretty happy about that, even though the portfolio was down a little bit this week. There was some concerns about home sales and the real estate in real estate being down this week. I'm not entirely sure why that would affect Sunstone Hotel. The SHO is the ticker symbol. As you can see here, it's the second company in the bottom there. They invest in a lot of hotels, and I don't really see how home buying is going to affect that. So I don't think that particular stock being down is actually relevant to the news. So I think that maybe there was a different reason for that being down. I haven't looked at the news yet, but it wasn't a big enough move for me to be concerned. Now, AGNC, you can see the ticker symbol there, AGNC. Now, they leverage more. They actually are a leveraged real estate investment trust. They actually negotiate interest rates for mortgages. And I would think that this would have the news of home sales being low, would have an impact on AGNC. But as you can see, it was up this week, despite the news. So, you know, I don't know really if the big news about real estate really had much of an effect on my portfolio. It seems kind of mixed to me. I mean, it's barely down. I'm pretty happy with that. So, and I still get my north of 10% yield whenever even whenever the stocks are down. So I get that yield every year. So, it's more for the income than the performance. So again, negative 0.16%. Looks like my real estate investment trust portfolio actually outperformed the S&P 500 a little bit and Warren Buffett's portfolio a little bit. So let's go ahead and take a look at my next one. Okay, so here's my dividend portfolio. This is the one that's actually supposed to outperform the S&P 500 index. Now you can see that despite the S&P 500 index being down, my portfolio is up 0.13%. Now, not very much, mind you. I mean, you look at this, I only made about $5, but hey, I outperformed the S&P 500 index again and Warren Buffett's company, Berkshire Hathaway. So, I still get some bragging rights. The market was down, but I was up, and it's always good to be up, So, I'm pretty happy about that, even though I didn't make a lot of money. And actually, I lost money overall in my portfolio because my real estate investment trust, if you look, has about $6,000 in it right now, whereas my dividend portfolio only has about a little bit under $3,600 in it. But again, it was up, so that's pretty good. I did achieve my goal, at least for this week, in outperforming both the S&P 500 index and Berkshire Hathaway. Now, on a week-to-week basis, my portfolio has so far tended to outperform the S&P 500 index and the Berkshire Hathaway portfolio. This is the first video I've done that's actually tracked it week by week. I'm going to keep tracking this, and we're just going to see how I do in comparison. In about a year's time, I want to look at look at the benchmarks and look at my portfolios and see how it stacked up over the year. But I'm pretty happy with what happened. I did lose a little bit of money in the stock market because, again, I am weighted a bit towards the real estate investment trust. So technically, I did lose money, just like the market did. And I probably lost maybe about 0.05 or 0.1% overall if you count both of my portfolios together, which still would outperform the S&P 500 index and Berkshire Hathaway for this week. So I am pretty happy about that, and we're just going to keep tracking it and see what happens. And I will be sharing my knowledge about investing along the way as I track my investment journey. And I'm pretty satisfied with my portfolio's performance this week considering market conditions. Hopefully this week we'll have a better week. Now we are going to have a lot of companies reporting earnings next week, so the market may get a little all over the place. So if you see a lot of fluctuations, just hang in there and if you have a working strategy, just stick to it. And over the next couple of weeks, I do want to talk about how to value a company so that you can be better informed on how to pick stocks if you want to invest in individual stocks as an investor. Until then, I really appreciate you watching if you made it this far, and I hope you have a great day, and God bless.